I'm sure you heard many times from top personal finance YouTubers like Stepan, MeetKevin or Andrei Jikh how it's good to invest in real estate. But what is good for Stepan or MeetKevin with the millions of income will not be easy for you and me. But how to start to invest in real estate with just $1,000? Huh? That's a problem. But I have a solution, and the name of this solution is a Fundrise platform. I'll show in this video how I invested my $100,000, but actually started with just $1,000, and how I significantly improved my investment portfolio with the real estate investment assets all over the United States. And by the way, I don't have any deep knowledge in real estate and remodeling of houses and how to manage it. So keep watching. Okay, you probably know that the real estate grows in the United States at a very high rate, so investing in it is a kind of great decision you can make. There are several ways to do it, so just let me mention all of them to give you a full picture. Please don't skip video in this place, it's very important to explain before I actually show you Fundrise platform in action. And by the way, let me be transparent with you, this video is not sponsored by Fundrise. I have referral link in the description if you want to start investing, but it's a win-win referral for you and me. Okay, let's go. The first and most obvious way to start investing in real estate just to buy a house. But you need to have money for it and the risk is very high. You have to apply for mortgage, you need a high credit score, and of course you have to know the market very well. The second option could be a flipping houses. It's when you buy a house, repair it and sell it at a much higher price. This way requires a lot of money, and what is more important, you need a special knowledge. You should know all the rules and codes related to real estate remodeling, you should have reliable contractors, so that's not easy at all. And the third, the most time-consuming and probably money-consuming way, investing in multifamily units. This way of investing usually requires a person to be an accredited investor. And an accredited investor is someone who has $200,000 or even more per year than the annual income, and they have the annual income for the foreseeable future, or someone who has $1 million plus net worth, and not counting their primary residence. So it's very complicated, time and money consuming process to become an accredited investor. Okay, so I almost finished with my explanation. As you can see, investing in real estate can be a very complicated process. You should have a lot of money, you should know how to manage property and many other things. But how to invest in real estate with only $1,000? Now we came to this point. And the answer is buying shares in different real estate projects. You can do it with REITs. What is REITs? Basically electronic real estate investment trust. So if you are familiar with the regular REITs, privately or publicly traded REITs, this is basically the same thing. And you can do it through different platforms. And Fundrise is essentially an online investment platform that allows you to invest in real estate passively. Fundrise takes an actual real estate project from all over across the 50 United States and turns them into REITs. So it's a kind of similar to like an ETF or a mutual fund if you're familiar with that, except this is a basket of actual real estate projects from across the 50 states. That's why I like Fundrise. Because of diversification of the building project, they make investing in real estate less risky, with almost predictable rate of return, about 6, 7, maybe 8% per year. I will show my actual return. I've been using this platform since 2017 and really enjoy it. It's really great because it allows you to invest in real estate before you earn a ton of money. Okay, now how does it work? So essentially what happens when you invest in Fundrise is you are purchasing shares of what is called REITs. And there is also something else called an E-fund. And they are non-traded, so let me explain. So these funds don't trade on the Nasdaq or New York Stock Exchange. They are privately owned REITs, and therefore you can only buy and sell them through the Fundrise platform. The only option through Fundrise is to invest in portfolios, meaning you can't pick and choose individual real estate projects to invest in. You may ask why. One of the main reasons for that is because if they were allowing people to pick and choose individual projects, that would be considered as a private placement, or you would have to be an accredited investor. Because of the portfolio-based investing, because of the nature of this kind of investing, you don't need to be an accredited investor to invest with a Fundrise. So let me show how it works in my case. Okay. First of all, you see that right now, starting from 2017, from December 1st of 2017, I built my portfolio to the level of 120,000, almost $130,000. And every year I'm receiving a dividends or I'm receiving a kind of appreciation. That's pretty important point in investing with a Fundrise. You can choose from different levels, or you can choose a different investment plan. For example, if you want just to have a supplemental income, just create an attractive, consistent, passive income stream, you can choose this way. But if you want to get as much long-term overall return, you have to choose a long-term growth. If you're choosing supplemental income, every month or every quarter, to be honest, every quarter you will be receiving dividends in some way. For example, at the beginning it was like a $200, then $300, then $700, and my last dividends was about $900 per quarter. Because I have, first of all, several risky assets like opportunistic, I have very stable assets like a fixed income that just giving me dividends every quarter. And I have about 200 real estate properties all over US. Some of them could cost like a 7 or 10 million or $2 million. That's almost impossible for average investor to buy. And for example, you could buy a property somewhere in LA, or you can have a property in Texas near Dallas, or in Florida near Tampa. So that's a really powerful way to decrease a level of risk and to have a pretty high performance. My performance starting from 2019 was about 7% almost every year. Even in 2020, when many assets plumbed significantly, I had like a 7% return on my investments. So I hope you will enjoy this platform as well. And what is really cool, Fundrise offers several types of plans. Starter is only for $500. It's a very basic portfolio and it's affordable for anyone. If you work a part-time and if you work somewhere, let's say at fast food restaurant, you can still scrap a $500 to get started if you want. If you want to choose between different options and you have, let's say, $1,000 to invest, consider choosing a core portfolio. There are 3 different options for you. So let's compare them and figure out which one will be the best for you. For example, they have a plan that's called Supplemental Income. It aims to produce the most consistent returns, but with a lower total potential return over the life of your investment. It comprises 70–80% of income-focused assets and only 20% of a growth-focused asset. This plan will be the best for you if your aim is to get a fastest possible income. So this plan will be great for you if you just want to get a dividends on a quarterly basis and you don't want to risk a lot with your investment in real estate. The second option is called Balanced Portfolio. This one consists of 50% of growth-oriented asset and the other 50% they are income-oriented asset. So this portfolio is weighted relatively evenly across the income and growth-oriented real estate assets. It has lower returns early on, but with the potential for higher returns later on in the life of the investment. It's a kind of golden middle. And the last option they have called a long-term growth. I really like this one. With low to no returns for the first couple of years, but with the highest potential return over the long term, a kind of J curve. That's all this portfolio about. It's weighted toward assets that have a high potential to appreciate in value, and the plan will receive little to no income during the first years, but if you are focused on a long-term investment, this plan will give you the best benefits in the future. So basically, you are choosing between three options, like a dividends, long-term growth, and somewhere in the middle. And what is really cool that in every portfolio you have these different projects, and Fundrise will be sending you updates via email on these projects when ones are completed or whatever happens, or if they have any sales involved. And you can click on every single project and learn about what is going on and what the money have been used for, as well as risk rating changed, or maybe how much money is invested, is the debt or equity involved, and any other changes with your project. And you can get a lot of information on every project you have. It all depends on how deep you want to go with this investment. If you want to be totally passive and you don't want to get these updates, it's okay. If you want to check every location, you literally can take all these projects and check physically every location. And now one more thing I want to talk about, and there is a fee associated with the Fundrise. They have a very transparent fee structure, which is all about 1% per year based on the value of your account, or 1% of annual asset management fee. A lot of these different real estate crowdfunding platforms, they have a pretty complicated fee structure, but that's not the case in case of Fundrise. So I really like they are very open. I like Fundrise because they tell you what your fees are. Right on the homepage of your portfolio you can see your returns to date, and down there it shows you what you have earned from dividends, what you have earned from asset appreciation, and exactly how much money you paid in advisory fees. So they're very transparent about the fee structure. You may ask, is their fee high or not? Well, I think no. Because the other option you literally have to visit every location you invested, you have to manage all the renovations and everything related to real estate investment, and that's a nightmare. And if you're investing with a group of investors, sometimes you have to do due diligence, and you have become a accredited investor, and I'm not ready for this. And one more thing about REIT and Fundrise. Well, the difference between a publicly traded REIT and Fundrise is that you invested directly into real estate, as opposite to where the REIT is you invested in the company, and it's a big difference. REITs can do shopping centers, senior living, restaurants, whatever you want. However, you see the exact property that you own. So now you're gonna see the number of different properties in the portfolio, and if you drive by the property, you can literally tell your friends, hey, I own part of this building, as opposite to REIT, which is just invested in the corporation, I mean publicly traded REITs. So I hope you see how many advantages Fundrise have. So the first pros of Fundraise is that you have a low minimum to get started. You can start with $500. The second is that it's truly passive kind of investment. You don't need to manage the project. You're not leading up the retail space. You're not dealing with the, leaking toilets and all this stuff. It's a kind of best possible passive investment. You receive a quarterly dividend and you are fine. And the third thing that you don't need to be accredited investor. And the last but not least, your portfolio will be well diversified because you have a huge number of real estate properties all over United States. Of course, there are some cons of investing with a Fundrise, but I found only two of them. So first cons, it's a liquidity. They do have like a 60 or 90-day guarantee, which will actually refund your money, maybe with the penalties about 3%, which is a pretty crazy for investment platform, to be quite honest. However, real estate is not a kind of liquid asset, and it's like your stock where you can just literally sell your 10 shares of Microsoft or Tesla. In case of real estate, that's very different. And maybe the second cons that I found, if you are invested in a supplemental income portfolio, you will be getting dividends. What does it mean? That you will be paying a tax about 15% on your dividends income. That could be a problem for you if you really want to decrease amount of tax you pay every year. That's basically what I found as the cons of Fundrise platform. I hope you like this video. I try to explain all pros and cons of this platform and how you can invest with $1,000. If you like this video and if you want me to make more video about Fundraise, about my portfolio, just let me know in the comments and I will do it for you. Thank you for watching and have a good day.